All right, you're live, Simon.
Hello, everybody, and welcome to episode 56 of Bank to the Future Live. As promised in previous episodes of Bank to the Future Live, we are doing a special series with many of our portfolio companies to keep everyone up to date with what's happening in different areas. So in previous episodes, we did a special exchange episode. Sorry.
Hello, everybody, and welcome to episode 56 of
I
Bank
think
to the Future
someone's
Live.
got
As
it
promised,
on their screen. Is that you, Bill? Cool. All right. I was getting an intro from myself through someone else's screen. That's cool. Yes, we're doing episodes on how different areas have been affected by the current market. Initially, it was really about the health crisis, but now the health crisis is turning into an economic crisis that then might follow with a financial crisis. So what we wanted to do is get as many of our portfolio companies on to share what's been happening in their world, what's been happening with adoption in different industries. And today we've got two of our portfolio companies. We've got Bill, who's the CEO and co-founder of ABRA. And we've got JP, who's, are you CEO or you're CEO, right, JP? Yep. CEO and co-founder of EXODUS. Now, what's really interesting, I think, for us to dive into in the beginning, firstly, I'll let them give their brief intros about the latest visions for their companies. I'm sure they're two old school people in Bitcoin. The companies have been around for a while and often maybe have been through different pivots. So it's interesting to hear about that. The other thing that I think is quite interesting is the whole concept of self-custodial versus custodial wallets. So we'll jump a bit into that because if I'm reading the headlines correctly, I think ABRA's had a slight shift. So it'd be interesting to hear their reasoning behind that. But also, if you've got any questions that you would like to ask of either Bill or JP as we go through this, then you can either grab us on Telegram, or our Telegram group is at BF_token. You can get our attention there, or you can use Twitter, #BFLive, or you can just use the YouTube chat if you're watching us here on YouTube. This should be live on our Facebook page, on our YouTube channel, and also our Twitter live feed. So let's jump straight in, and why don't we just get a brief intro of, why don't you start with like what you originally set out to achieve, where you guys are at right now, and we'll start with let's do Bill from ABRA. Can you help us understand the vision behind ABRA, where you guys are at right now, what's happening in ABRA world?
Yeah. Good morning from Los Gatos, California. I know we're live globally, but it's great to be with all of you from my home, and just give you some background. ABRA is a cryptocurrency banking platform. It's a app-based service, iPhone, Android. We have users in over 100 countries. Our app allows people to buy, sell, hold, store myriad cryptocurrencies. I think the number is something like, it's well over 100. I think it's like 140, 150 now, and we're adding more like every week. So you can exchange between any two cryptocurrencies. You can buy crypto using your bank account. You can deposit crypto. You can deposit fiat. You can deposit stable coins, and you can withdraw all of those as well. And we have users doing all of those different types of transactions. Our mission is to use the cryptocurrencies that we support to enable a global banking platform, whether it's moving money around via stable coins, investing in cryptocurrencies, earning interest, getting loans. We basically want to build a full stack, making payments. We want to build a full stack banking service over time that takes advantage of crypto to make the democratization of banking services possible at internet scale, right? It's impossible to be an internet bank in the traditional sense because of regulation and all the other stuff that you have to do to be a bank. And our goal is to leverage cryptocurrency to make global banking possible, starting with the adoption of cryptocurrencies themselves and then adding more and more capabilities over time.
Awesome. Okay. And JP, do you want to give us a bit of background on Exodus, one of our early funding rounds?
Yeah, hi, I'm JP out of Nebraska, and thank you for having me as well. So Exodus, I think, kind of embodies, the name Exodus kind of embodies our mission as a way to build software that's an escape from the traditional financial system. And so what that really means for us is a focus on a number of things, but being non-custodial. In other words, you've heard the phrase, not your keys, not your coins. It's very important to us for our customers to actually be able to be empowered to control their own wealth. And so what Exodus is, it's a wallet for both the desktop and the mobile. And what we're trying to do is make it very easy for the mainstream. And so if you look at Exodus and you go to our website, you can see that we care immensely about design and the whole experience of the software. And so what we're finding right now, as the mainstream is getting more interested into cryptocurrency, we have to make things a lot easier for the mainstream. And that means simplifying things like addresses and security. A lot of people don't know what these crazy 12-word phrases are. And so we've got to make things very, very simple for our customers. And beyond that, cryptocurrency has been mostly focused on a realm of speculation. And we want to make cryptocurrency more about utility. How can a person actually get real utility out of their cryptocurrency? And so we have built an app store inside of Exodus, and we've started with compound finance so that customers can easily start earning an interest rate on their cryptocurrency. And over time, we're going to expand upon that and add more apps inside of Exodus.
Awesome. Okay, so let's start with this whole concept of self-custodial and custodial. So two different visions there. And one of them was around the world is used to this service of banking, and cryptocurrency allows you to become your own bank. A lot of phrases that we see, then there is, I guess, a much more normal user experience that people can experience if you do things in a centralized way. But at the same time, cryptocurrency allows you to be your own bank, but then the users have to learn these strange concepts that are foreign to them. And sometimes it's just too much of a hurdle for them to overcome. So how do you see that all playing out within your application? So Exodus said it's all about, it's all in the name. This is about exiting finance. Bill said we're trying to build a banking application, but using the power of cryptocurrencies. Bill, why don't you add your thoughts on this friction between these two different worlds and where you think it's going to end up for ABRA?
For sure. So I don't think anybody has more experience in bridging the divide between self-custody, non-self-custody, initiated, uninitiated. So when we started ABRA and we were only supporting Bitcoin effectively in the wallets, and we had effectively stable coins that were multi-sig scripts that were effectively built using Bitcoin. And that was all self-custodied, where you were basically one key holder in the multi-sig script model. And as we basically got customers in more and more countries, got into the hundreds of thousands, it became very unwieldy for the average consumer that we were dealing with to understand key management, self-custody, backup phrases. And I would write blog articles, and I've been doing this for 30 years. I've been in internet security since you could, right? PKI, and whatnot. And so I understand.
Bill, why don't you actually, before you continue that thought, why don't you tell us your background? Because I don't think we covered that.
Yeah, sure. So I've been working in software and internet since the late 80s. I was an engineer, a researcher at the CIA. I was working on secure messaging systems before even the wall fell down in the late 80s, and then moved over for a while when I came out to California worked at NASA as an engineer. Really, my calling was to be an entrepreneur. So I ended up working a little bit on Wall Street for a while, where I went nuts, but I was a quant at Goldman. And then I've really spent the better part of the last 20 plus years as an entrepreneur, first at Netscape, and the last few years have been very focused on Bitcoin, was mining back in, I think, was it 13? I'm very passionate about the consumer adoption of software technologies to solve very specific problems. And the problem that I've been personally very focused on the last kind of 10 plus years of my life is financial inclusion, making banking accessible to the masses, particularly at internet scale, right? As we first feature phones, now smartphones, how do you basically use this new handheld device to basically make banking services available to the masses, money transfer, lending, borrow, whatever. That's been my personal passion, but I'm a technologist at heart who also is very passionate about consumer adoption of technology. So back to your question about self-custody versus managed custody. We after talking to thousands of users, we do user interviews one-on-one, we do surveys. We had, no matter how many blogs, how many articles we would write, we would force users to verify a backup phrase after a certain number of logins in the app. And so the actual follow through on that for active users is 100% because we didn't give them a choice. But the number of users that we would lose along the way who didn't understand what we were talking about was staggering. But we had no choice but to do that because ethically, we don't want people holding thousands of dollars on their phone and not be assured that if they lose their phone, they still have their money. Anyway, it became unwieldy, untenable to scale that. As we also, at the same time, we're adding more cryptocurrencies to the platform, which means the app itself has to be able to do key management across all of these different cryptocurrencies. So that became impossible. And so at the same time, we're looking at our roadmap to say, hey, we want to add more and more banking features around lending, interest earning products, payments, stuff that I don't want to get into detail because we haven't announced yet, but all of which become extremely complicated and difficult for us to offer in a non-custodial environment, especially when our average user doesn't understand what a private key is or what a backup is. Now we have 15% of our users who would probably prefer everything that we're doing be non-custodial because they understand everything I'm saying. But the rest either don't care, don't understand, or haven't even realized, even though we've told them 10 times that we've made the transition, right, to a full custody solution. So that transition for us is a combination of user experience, user security, and value-added services that we need to offer over time.
Awesome. So JP,
one other point. We have a significant percentage of our users who do HODL long-term, and we encourage them to use hardware wallets for backup, which is what I do. I have a significant amount of Bitcoin, which nobody would ever find. Multi-sig hardware wallets, whatever. And so we encourage our users to do that. And then they move back and forth between their hardware wallet and ABRA when they want to exchange or send money or exchange between different currencies and whatnot.
Yeah, I mean, very, very important point. Different application, different use case. You don't want to put your long-term savings on your phone. That's never going to work well. It's never going to be a good idea. But obviously, it's interesting because, those involved in Bitcoin from the early days, you might have had a lot of Bitcoin on your phone, but then over time, that's become a significant amount of money and a significant value. And then you obviously have to find different security models. Essentially, what is on your phone, you should come from the perspective that is money that might go missing and it shouldn't be your long-term savings. JP, how do you think about that? How have you overcome these hurdles? Is there any, obviously, is Exodus going to be come back into centralization, or do you think that these hurdles can be overcome?
Yeah, great question. I first want to acknowledge that I think in the short term, I think Bill's right. When I get in an Uber, I ask every Uber driver, I say, what do you think about Bitcoin or what do you think about cryptocurrency? And almost always, they always say, I'm afraid of it. I'm scared. It can easily be hacked from your computer, and I don't want to lose that money. So I think in the short term, Bill is absolutely right that customers, number one, they don't care, and number two, it's difficult for them to actually secure their keys. So I completely agree with that. Now, long term, I think this is where we differ, is that today, when you kind of think of what's happened with 2008, the financial crisis, and all this money being all these banks, and this notion of custody, I can't help but believe that we are heading down that same path with companies like Binance and Coinbase. The two biggest companies in this space are custody models, and if they get hacked, there's a chance that money's gone. Or who knows what they're doing with that money? They can do what they want with that money. They're free to do whatever they want. Their terms of service actually say we can do what we want with this money. And beyond all that, then if you consider the aspect of privacy, all of these companies, the custody companies, know what you're doing, and they have to by law. And so I don't think that these are consumer-friendly behaviors. And so I believe long-term, if we can solve these problems and make it so simple that customers don't have to think about a 12-word secret phrase, don't have to think about all these complicated things, then I think we can make the non-custodial solutions much more attractive for customers.
Awesome. Okay, so how can we do that? Why we don't want everyone to write these backup phrases? What's the solution to where it's going? Where's it going to go?
I'm actually going to do a shout out to a company in this space that I think actually has done a really good job. Zengo, they have technology where you're not using your 12-word phrase at all, and they use what's called a face map, and they have kind of this creative technology where there's a backup and it's on your iCloud, and in combination with biometrics, a customer does not even have to know that they have a 12-word phrase. So they've done a really good job there. This is stuff that we're looking at as well. These are things that we're really interested in, because again, these 12-word phrases, we can't have people losing them. And we're seeing that right now. Customers will write into us and they'll say, hey, I lost my 12-word phrase and I got a new phone. What do I do? And then our customer service team has to deliver the really bad news to them. And so we've got to solve these problems. But I think, like I said, a company like Zengo has done a really good job here with their face map technology.
Yeah. Okay. So, I mean, our audience are primarily investors that are watching these things. We've always taken the opinion that we're going to have a two-tiered economy. The need for centralized services has outperformed those that are in the non-custodial service. You can see that with our highest performing asset class or investments on Bank to the Future have all been exchanges: Coinbase, Bitfinex, Bitstamp, Kraken. And then, but at the same time, we really believe that in the desire and the need in the future to have self-custodial is really the only way we avoid just, not creating the same thing, but with Bitcoin or crypto at the back end. But both are going to have a use case and both are going to have different things. And so we've always been looking at investing in both areas. But to date, as we said, the centralized model has been the highest performing investments and has had the highest adoption curve. So Bill, have you got anything you want to add to what JP just said?
Yeah, a couple of things. So you're right around the centralized models, but I would also say that they're not successful, those companies you mentioned, because they're centralized. They're successful because they're solving a problem that retail investors need solved, which is the ability to trade, exchange, move in and out of fiat or other cryptocurrencies in exchange for more cryptocurrencies at large scale. It just so happens that solving that problem right now is easier and more straightforward using a centralized model. That may change over time, it may not. I think that as that service model becomes commoditized, which we're not there yet, prices are fairly stable, I think, in trading. If it becomes truly commoditized and the prices go to zero, we may see more innovation in ways that squeeze more revenue and value-added services out in other areas, but we're not there yet. And so the centralized model is clearly solving problems. And look, I have been trying to do key management for over 20 years, right? I've built PKI infrastructure for governments when I told them, managing keys for people in your country is a really bad idea, and they wanted to do it anyway, right? So I've been looking at how do you basically do key management for anyone at large scale for decades, and I have yet to see a good solution that the average consumer can deal with that also deals with things like backups. What if I lose something? What if I die? What happens if the power goes out? I mean, it's problem after problem. And so I think that the idea of your keys, your crypto is a core tenet of why I'm excited about Bitcoin. Uh, However, I think for the average adopter of this technology, we've got a long way to go to be able to solve those problems. Even with the services now that are trying to either put naming services on top or other things, it's all variations on the same theme, where even the earliest adopters of those services are going to be people who understand the technology by and large. And so I think we're on the first 10 years was basically about creating these protocols, establishing the ecosystem of symbiotic relationships across the Bitcoin protocol. I think the next 10 years is clearly going to be about service adoption in some part of the spectrum of decentralized finance. And then I think in terms of self-custody key management, it's probably another 10 years out. And so it's important that we have companies or universities that are willing to make bets on these technologies in the short term. That's how we move forward. But I think we need to right-size our expectations as to how that's going to happen. Because even in a self-custody model, if you lose electricity, whether you have self-custody or somebody else manages custody, the crypto is mostly useless at that point, right? So we're still based on a model that says, crypto only works when we have electricity. And so if the shit really hits the fan, right, it's not going to matter whether it's on a hardware wallet or in the cloud at that point.
Okay, you touched upon an interesting point, which is something that's we've noticed front of mind for many people right now, given the current environment and situation, is inheritance. So a lot of people are doing, planning right now for things that they wouldn't have planned for before, given the fact that, front of mind is everyone's health. What if, at Bank to the Future, we've had to, in our business, look at contingent, we, as a company that's registered, we've always had to have a robust contingency plan. What happens if some of the directors pass away? We've had situations like with Quadrica, where someone's operating a business and the director has allegedly passed away and everyone loses their money. How do you see, what types of things are you seeing in terms of this whole inheritance subject? People that need to, if they own their private key, how are they dealing with, what are the solutions out there for passing that wealth on should something bad happen? And then also at the business level, if you're in the custody model, how can you ensure what type of measures, obviously you can't talk about your security model, but what type of measures can a company put in place in order to ensure that if a key person that holds a private key, if something happens to them, that the customers don't lose their money? Maybe, do you want to start with that one, JP, on the self-custodial level? Are you seeing anything there?
Yeah, so today, given that this industry is so new, we're not and the adoption is still by a lot of people that are millennials or Gen Z, and some Gen X and of course boomers, but it's mainly millennials and Gen Z. And so we don't see a lot of that today. But to solve those problems, yeah, that's going to be complicated. And so the way that we're thinking about that is by, there's mechanisms known as social backups, potentially, where we can use encryption to distribute these backups all across a number of people in kind of a social network. And then you would have to give a shared secret of some sort to one of your loved ones and say, hey, if something happens to me, you're going to have to use this. And then you could, also tell people in your network, if you have shared friends, of this social backup, and say, hey, if something happens to me, approve this access to my loved ones so that they can recover my money. So it's definitely going to be complicated, but it is something that I believe can be solved. But yeah, you're absolutely right with what happened with the exchange in Canada. I mean, that was a really, really bad situation. And that just goes to show that some of these custody models can really be troubling in those sorts of scenarios.
Yeah. What about the centralized level, Bill? What can companies do in order to ensure that they've got, really good practices? So
Sure.
if any of the key people go, the customers' funds are safe.
Yeah, so that's a great question. So I think, there's a lot of things that a bank does to secure their systems that a consumer doesn't see, right? Everything from, access control to 2FA, et cetera, et cetera. Now, crypto, even in a custody model, has advantages that we can take advantage of. Multi-sig, for example. So we have two different levels of control that we have to deal with at ABRA. The first is our own crypto, and second, more importantly, is our users' crypto. For ABRA's crypto, everything that we don't need in hot wallets is stored in cold storage using secret processes that take, secret sharing, multi-sig, hardware wallets, safety deposit boxes. I mean, no one could reconstitute this process unless they held a gun to multiple people's heads. So it would be, and so it's as secure as I think you can be, and still have ready access to that money in a relatively short time frame. On the consumer side, we basically only work with custody partners who have been audited, who are, a proven technology, who are managing billions of dollars worth of cryptocurrencies. In our own wallets, we do security audits constantly. And so, we're constantly looking at ways to push the envelope. Around inheritance, this, I think in a custody model is very similar to a bank account, right? So, the practices there will evolve for us over time. It's something that we talk about. But in the cases where, it's happened today, we've been able to work with the estates or with the inheriting party to make sure that they can, upon proof, can access those funds. And we've never had we have attempted fraud. I mean, there's no scenario under the sun that I think people haven't tried to steal other people's money, commit bank wire fraud. I mean, we see everything, right? And we have a team that's dedicated to basically dealing with fraud. Most of the fraud that we see actually is more in the banking system than on the crypto side, because that's where the opportunities are, particularly in the messed up U.S. system around ACH and whatnot. But on the crypto side, it's pretty straightforward. A lot of people who have 6 figures and up have put processes in place we actually use a backup phrase as a way to re-authenticate into your wallet from a new phone, even though it's a custody model. And so you can actually do that. And that's especially helpful for inheritance, more so than losing your phone. And so we have people who've done that, for example. And we have people who've just sent us paperwork to say, hey, I inherited this money. Here's the paperwork. Here's the IDs. And we'll go overboard to verify that person is. And it takes time because you're now integrating the physical world and the digital world. But by and large, the process works.
Okay. So in the centralized model, you obviously have to go through that process. So let's say one of your customers passes away. Someone else says, here's my will. I'm entitled to this wallet type thing. And it's the same process as if in banking. But JP, you don't have to deal with any of that, right? Because it's literally whoever owns the private key owns the whatever's in the Exodus user interface, right?
Yep, that's exactly correct.
Okay, so it's all about how you pass on your private key to somebody else. And then you got to start thinking about all the people that you don't trust and things that can go wrong in that scenario in trying to pass on that private key. Yeah, that's
absolutely. Yeah, absolutely. Like today, that's the trade-off for and the responsibility a person must take to be the custodian of their own assets. But like I said, long term, we believe we can leverage some technology and make it a bit simpler for people in these scenarios.
Okay, let's switch gear slightly to adoption. So I think we're in one of the most interesting months probably in both crypto and financial history. So obviously this month, Bitcoin goes into halving, which means the supply of new Bitcoins is cut in half from 12.5 Bitcoins every 10 minutes to the miners to 6.25. And in a couple of weeks, we're going to see quantitative tightening. And at the same time, we have this incredible health crisis where governments all around the world have had just a crazy amount of fiscal and monetary resources that they have needed to chuck at the economy due to this unprecedented time in terms of unemployment and all sorts of stuff. And, so we're seeing this quantitative easing funded new world that we need to transition to at the same time as quantitative tightening within Bitcoin. Obviously, when the markets all crashed and everything crashed together, we needed to give it a little bit of time to settle and see where, whether people were dumping all of their crypto in a move for safety and cash, or whether people are going to be taking their cash and looking for something that they think might benefit from quantitative tightening rather than quantitative easing. Is it too early, or what types of adoption have you seen throughout this health crisis? Bad for your business, good for your business? Tell us what you've seen throughout these different cycles. Should we start with you, JP?
Sure. So I want to say that on March 12th, that Black Thursday, when Bitcoin crashed a little over 40% it was scary because we as a company, we get our revenue in Bitcoin and we pay salaries in Bitcoin. And so we hold Bitcoin. And so that was a scary moment for us. But what we've seen the entire year since January 1st, though, is consistent adoption. And even throughout the month of March, even at that moment, I remember thinking like, oh, where is our business headed? You know, what's going to happen because of what's happening in the state of the world? What's going to happen to our business? Trading volume is just continues to grow and grow and grow. And so when we look back to the beginning of March, I mean, we're up about 65% in growth since the beginning of March. And just since the beginning of April, we're up 20%. And so we are seeing consistent adoption where people are still very excited about getting into cryptocurrency. I believe it has a lot to do with what's going on in the state of the world and with the upcoming Bitcoin halving.
So what, as a self-custodial, we'll move to you, Bill, in a second, but as a self-custodial wallet, do you have these, what types of stats do you have? Because obviously as a privacy-centric company, you probably don't know too much about your customers, but do you know when loads of people are downloading a wallet? What do you know? What don't you know?
Yeah, good question. So of course we know downloads because we track that on our website. And then when people download the wallet and then open up the wallet, and then once they do a backup, because we store metadata, we don't store private keys on our server, but we store encrypted metadata on our servers. And so we can count those backup files. And so we're just seeing, I mean, over the lifetime, we've had over about 1 million customers that have actually created a backup. But in recent times, it's in, daily we're seeing thousands and thousands. It just keeps growing and growing every single day.
Okay, what about Bill? What are you seeing in these markets?
Yeah, sure. So let me start out just with a shout out to the ABRA team, right? So like everyone else, we had to move to working from home, telecommuting across the board, full stop. Nobody's in our office, and so and that includes we have had people who've had the COVID virus working for ABRA in Asia. We have folks in Latin America. We have folks here in the Bay Area, and we have hundreds of thousands of users, right? So across hundreds of thousands of wallets, and so. They have done an unbelievable job of keeping the lights on and launching new features. Like we actually run it for the techies out there, a 2-week sprint process where we're constantly releasing new versions of our app. And we haven't even missed a sprint since all of this craziness started. So they've done a really not only noble job, but phenomenal job in in keeping the quality of service up. I would say most of our users probably haven't even noticed a difference in any way whatsoever. We've definitely seen huge increase in fraud on the bank side. And so we've had to put more processes in place to prevent bank wire fraud, which I can't go into, but the fraud checks are working. And so, people are getting a little bit more desperate, unfortunately, and that's very sad for us to see because we don't want to profit. Look, I want Bitcoin to go to 1 million and we all make money that way, and that's great, right? So now the direct answer to your question is we definitely make more money in volatile markets. When in 2017, when things went nuts, we were making a lot of money, but we were also in a self-custody model at that point, and in the early days, we were actually absorbing the mining fee for users because we thought it would be clever to not expose the complexity of that. And at one point, I think we were paying $15 mining fees when Bitcoin was on a mark to 20,000 because of our multi-sig transactions, right? So that was crazy. So unfortunately, we had to expose that to the users, and they started paying the mining fees, and everybody started complaining, and then we ended up with the 2x debate, that we had a few years ago. But now what we're seeing is just constant increase in volumes. We had a fantastic day yesterday from a usage perspective as we crossed 9,000. It's early morning here, and I can already tell you we're pretty close to yesterday's numbers already. So clearly, the increase in trading activity is having a great residual effect for ABRA, both in terms of new users, existing users coming back to the app, trading volume, exchange volume, deposit volume. We get deposits in Bitcoin, Ether, other currencies that people then fan out into altcoins. A lot of our users like to do that with ABRA, and then they'll move back to Bitcoin when volumes are a little bit more muted, et cetera, et cetera. So we're seeing all different kinds of activities in those areas. In Asia, we run a cash network where users can go to retail. So for example, in Manila, I can walk into a store with $10,000 worth of Philippine pesos and have those be converted to Bitcoin right at the point of sale into my ABRA app or as a stable coin in Philippine pesos. That cash deposit volume has also significantly increased in the past few weeks. And so a lot of interest from every perspective, whether it's stablecoin deposits, bank wires, cash deposits, crypto deposits, all of the key metrics for us are up significantly.
Famida, you got a question from the audience?
Well, it's actually a comment,
Okay.
a really interesting one. It's from John H. I think using Shamir backup is a great solution where you need, for instance, 2 out of 3 recovery seeds to unlock a wallet. And they have mentioned that Trezor is using this, and it would be great to see Exodus using this.
Yeah, this is when I referred to social backups earlier in this conversation, that would be the technology that powers these social backups. That's exactly right.
And you are integrated with Trezor because you sent me a Trezor 1, I think, didn't you?
Yep, that's right. Exodus supports a Trezor.
You got any comments on that, Tech, Bill?
Yeah, look, we, our CTO and myself looked at this in the early days. We looked at basically having most of our users are linked to lots of other ABRA users and using Shamir and other secret sharing techniques to, decentralize to some degree the private key. Even Facebook offers this feature. I've talked to people at Facebook, no one uses it, like no one. And they have billions of customers, right? So it's really hard. It's very easy to explain to a computer scientist how Shamir works. It's not even that hard if you know what you're doing to explain it to an individual user. You sit them down, a conversation like this, one-on-one, piece of paper, here's how it works. After half an hour, they get it, no problem. But if you have 1 million users, you can't do that, right? Because it would take years or decades to actually sit each user down one-on-one. So I think it's fantastic that JP and Exodus and others are trying to figure out how to make that consumer friendly. Because it really does make a difference if you can do it and the technology is valid and the math is valid. It's just a big uphill challenge to get users to understand how that stuff works and or hide the complexity altogether.
Yeah. Let's talk about the big adoption killer that all of us have to face, which is KYC, know your customer. So You know, I talked to so many crypto businesses. Actually, we first met JP because it was an introduction from Eric Voorhees. We were investors in Shapeshift, and Shapeshift built their whole mantra around this no KYC. You're just swapping private keys, and you can shift them from one to the other. You know, it was not having that centralized model and therefore not being mercy to such anti-money laundering laws. But obviously, I think Exodus was originally funded by Eric Voorhees or Shapeshift. Correct me if I'm wrong. Was it the company or Eric himself?
Eric himself.
Okay, so Eric was one of your seed investors. Unfortunately, they had to cave in, and Eric got a lot of criticism for that. And the customer actually thinks that we're actually sat here enjoying asking for all this data that kills our adoption, that we would rather not have, but we have to. Otherwise, as a director of a company that has to adhere to anti-money laundering laws, I go to prison if I get this wrong. My neck's on the line. It's such a frustrating thing that we have to, take the burden of killing our adoption, making everything such a hard process for our users, when really we just love to have the best user experience we could possibly have. But how has that personally affected you? So originally, am I correct in saying that the original business model at Exodus was you had an integration with Shapeshift, and therefore every time someone swapped, because there was no KYC, it fit into the self-custodial model, and therefore, you had to. But when they went into KYC, how were you affected, and what did you have to do to shift to that?
Yeah, good question. So Exodus has multiple exchange partners outside of Shapeshift. And so Exodus doesn't use Shapeshift any longer, but we still have multiple exchange partners that perform the instant exchange functionality. And since Exodus itself is not a custodian of the funds, Exodus actually is just an affiliate, like it's an affiliate payout from these exchanges for the exchanges happening from within the wallet. So the experience is still pretty much the same. People can still do instant exchanges inside of Exodus. Now, we are working currently on adding support to actually buy cryptocurrency with dollars from your bank account. And of course, there is no escaping KYC in that model. And so we're going to have to go down that route of making it super simple for people to KYC. But I agree. Yeah, I mean, it's in terms of user experience, it's definitely a friction point. And it also creates a haven of data for hackers to come in and steal identities of all of your customers. So it's a big concern. But yeah, unfortunately, if you want to interface with the traditional banking system, this is something that you absolutely have to do, as you said, Simon, to comply with the existing laws and regulations.
Yep.
Yeah, Bill, I remember, some of your earlier models is that you were incredibly innovative in this space. I think when I first met you, I believe you were giving a presentation. I think it was either in New York or something, some blockchain conference around about 2013 or something like that, when I last went to, yeah. And you came up with this incredible model that was quite hard to understand around synthetic swaps and using Bitcoin as collateral and figuring out a way where you could swap these financial products. And because it was done in a certain way, you weren't necessarily, you were at that self-custodial phase at that stage. Right. Could you help us understand like the evolution, and is it just inevitable that all of us, even Exodus, end up at this KYC model because it's just the state of the world wherever we go, and it's the laws, and we're all going to end up there no matter how innovative we get?
Yeah, and unfortunately, I hate to say it's getting worse, not better, right? I mean, look, we're fully committed at ABRA to following the letter of the law and being conservative in our interpretation of the law, and try to do it as best we can to the benefit of consumers where possible. But some of it is ridiculous. I mean, the Patriot Act is the worst named piece of legislation in history. There's nothing patriotic about it. And so, but it's the law. So I can protest all I want, but we still follow the law. And so, if you're touching the banking system in any way with ABRA, we have to know who you are, right? And so, either on behalf of another party, if they're processing a credit card transaction, or behalf of our bank processor for a wire or whatnot. And look, I mean, this is the advantage of the two biggest companies in the space, right? If you look at BitMEX and Binance, their success right now is a combination of first mover advantage and regulatory arbitrage, right? So they're basically able to completely forego the traditional banking system, or have up until now foregone the traditional banking system. And as a result, they've had to forego the US market, right? So neither company has their traditional service operating in the US, for all the reasons why companies like ABRA have to ask you to take a picture of your ID from your phone if you want to do a bank deposit into the app. So back to your original question, we were looking for clever ways to solve friction problems for consumers around traditional banking applications. And a lot of it worked from a technology perspective, but from a user adoption perspective, it was almost too clever. It was fantastic technology, but it was way ahead of its time in terms of solving the consumer problems we were hoping we would solve. So a lot of, we don't run synthetic assets in the system anymore, because stablecoins now are able to do what we wanted. And if you look at, DeFi's ability to peg a value, it's very similar to how ABRA worked, where in the DeFi model, the public is the counterparty to the contract. And in the case of our synthetics, ABRA was the counterparty to those contracts. And you can see what happens. And they've had issues with maintaining those pegs, right? And have to pay massive interest in order to do that, which makes the utility often difficult. And so it's fascinating. Look, I think there's going to be huge innovation in what people are calling DeFi. I'm not so sure DeFi is the best word for it, but we haven't figured out a better phrase yet. But that space, I think, is going to explode over I think the second 10 years of crypto is going to see increased adoption of trading, but new adoption in the DeFi space of innovative business models, innovative technologies, innovative banking solutions that solve new problems that we haven't even thought about yet. And so what ABRA is doing in that space, and what other companies like you mentioned Compound, JP earlier, are doing in that space is all very interesting to me. And then I think, in the 20 to 30 year time frame, we might actually see more your key, adoption, where people are migrating away from centralized services more en masse than just hardware wallets. But yeah, I mean, look, the bottom line is that there's no getting around the regulation. It's any hardware, any wallet company that thinks just because they're managing a self-custody system that they don't have to run an AML program is delusional today, right? And that's simply the way it goes.
Yeah. Okay, so final point of discussion before we hand it over to any questions that the audience might have. It seems like, I would say, if you characterize the last 10 years, it was all about growth from the investor side. Everyone was, entering our industry to see what type of growth returns they could get. But now we seem to have hit an interesting phase where it's all about yield and income and lending. And interestingly, both of you have mentioned that, the first app that you built within Exodus is a lending product. And also, Bill, in your intro, you were talking about banking. When we think about banking, we think about lending and interest. So have we entered the phase of interest yield? Do you think that the fact that there is no yield in the traditional markets to be had anymore, without, do you think that's going to usher in a new wave of people converting fiat to stable coins, then them having this, obviously the centralized custodial lending, but also the DeFi self-custodial lending? Do we think we're going to see a wave in the yield and interest sides? What are you seeing on that side, JP?
Yeah, absolutely. So as we know that the interest rate is the price of money, right? And what the Federal Reserve is doing is they are just distorting the actual price of money. And that's a real problem. And so giving consumers the ability to actually have a free market platform like what Compound has built allows people to go in, put money, earn an interest rate, and easily control all this whole entire experience. And so, yeah, absolutely. I think, and intuitively, it's easy for the mainstream consumer to understand. It's like you can put your money into this platform, and then you can earn an interest rate oftentimes significantly higher than what your bank will offer. And so, yeah, that's an absolutely very attractive model for mainstream consumers. And that's why we chose an integration with Compound first, because it's very easy to explain and very easy to say, look, cryptocurrency now has changed from something where you just buy and hold to something that you actually can earn money on. And not only earn money on, you can earn money on it every block. Compound, you earn money, interest approximately every 15 seconds with every Ethereum block by block. And that's a really powerful model that traditional finance, it just can't compete with.
And does it, I don't know too much about it because I haven't looked at it, but is it literally its name? It compounds at every block?
Yes. Actually, you
invest every block.
yeah, if you put like $100 in, and you withdraw a couple minutes later, you will have more than $100 when you withdraw.
Amazing. What are you seeing on the yield and lending side, Bill? Is that the future of ABRA?
Well, I don't know that lending is the future of ABRA. I think banking is the future of ABRA. But I think for us, redefining the banking stack to be crypto-based is the opportunity, right? I think if you want to democratize access to financial services, or put it another way, for somebody who grew up with the internet, like the pre-1.0 internet, we've yet to have internet scale banking for the reasons I mentioned, in the opening. And so Bitcoin and Ethereum represent the best opportunity we've ever had to do internet scale banking and have a banking protocol for the web or the internet or the mobile web itself. And so at ABRA, we're looking at everything from high yield products to lending products to cross-border payment products and foreign exchange products, all taking advantage of crypto and stable coins and DeFi, et cetera, et cetera. We have huge interest among our user base in earning interest on deposits and making investments via deposits. We've tested different products live with a smaller user base and continually split test new ideas and new products. We're spending a lot of time and a lot of money right now on the legal side to look at the DeFi ecosystem and figure out how to do what we want to do globally. We don't like launching features and making them only available to a subset of our users. So if I do something in the US, I want to be able to do it in China and the Philippines and Mexico and the UK, et cetera, et cetera. So that's complicated, but we think we have a fantastic strategy for taking advantage of customer demand and meeting that demand now. And so you're going to see lots of announcements over the next couple of quarters in this space, and doing things that nobody else in the space has figured out how to do, which is something that I think we've constantly pushed the envelope on at ABRA anyway. I would also say that, look, if you look at companies like Genesis that really push the envelope in creating the lending model, right? I mean, they found arbitrage opportunities across all of the symbiotic relationships in the ecosystem, whether it's institutional traders, retail hodlers, and they've basically, them and others now have basically figured out a way to create relationships across that ecosystem that optimize those yields. And over time, by definition, we'll probably start to see some of those yields close as more and more people get into the space and those arb opportunities become less and less. And that's a good thing. That means that there's more liquidity in the crypto ecosystem. It means that its stack for providing services analogous to the banking world is being formed and is becoming more liquid. And so as we see that, that's a good telltale leading indicator that more liquidity is coming into the crypto ecosystem in a way that's probably becoming more useful to more players. And so it's an important thing to be doing and to provide that type of kind of, whether it's the banking equivalent of a repo agreement or short-term lending agreements for short sellers for leverage, whatever it is, it's things that didn't exist 3 years ago, 4 years ago that are now slowly making their way to kind of the what I would call the 2.0 or even 1.1 version of the cryptocurrency world.
Famida, you got any questions for us, or should I carry on asking?
No, we do have some questions.
Okay, let's take some more.
And yeah, some comments as well just coming through saying this is great content. Gabrielle has said, democratize payments. #ABRA.
That's what we're trying to do.
Yeah. So the first question to ABRA here I have is, do you have any news or any updates for ABRA investors? I know that might have to be particularly for an ABRA investor update, but if you have any kind of business updates to just give an overview.
Yeah, so I can give a high-level overview here. I don't want to just steal the microphone, so just a few seconds, and then I'm happy if also Simon, if we want to do just an LP only update at some point, I'm happy to do that, and we can schedule something. But look, I mean, we have hundreds of thousands of wallets now active, over 100 countries. We've processed, 1.5 billion is the number we've announced. It's more than that now, but in terms of transaction volume, we're having a pretty good week right now, and we have a fantastic product pipeline. It's definitely been a huge challenge. I'll tell you up front, we've had to cut costs without actually doing any layoffs specific to COVID, for example. And it's been a big challenge. We've had to go back to, all of our vendors, all of our partners. We've negotiated contracts from rent all the way down. And everybody has been willing to work with us as we say, okay, we want to be a big, important company for the long term, 10, 20, 30 years. We have to make sure we're in a position to get to profitability and survive now. This is not a charity. It's a business, and the staying power of a business means that you're basically covering costs with margin contribution from revenue. And so we're on a path to being able to do that now. And everyone in here has stepped up to make that possible, and especially the team working remotely at ABRA. But sorry to steal the microphone, but I'm happy to do a longer update for LPs in the coming weeks.
Yeah, Famida, we'll definitely follow up on that and get a investor specific one. That would be great.
Sure, happy to do
Yeah,
it.
sure. And also for Exodus as well, because I mean, there are some similar questions for Exodus as well for an overview. If Exodus wanted to give an overview.
Yeah, absolutely. Yeah, absolutely. So throughout this crisis, we were actually positioned well, given that we are already a remote company with our employees distributed all over the world. And so everybody's already working from home. And so when it comes to operational changes, there weren't many changes for us. Now, like Bill had mentioned, kind of cutting costs, we're being sensitive to our costs. We haven't had to cut too many costs, but we have had to pay attention to slowing down hiring just to make sure that we can weather the storm and get through this without issues. But long term, or this quarter alone, we are seeing massive growth in volume and trade exchange volume, which is exciting to see. And as I mentioned earlier in the call, our big play is to really simplify things for the masses and make cryptocurrency more about utility, giving people real reasons to use their cryptocurrency. And that's where the basis of our app store and that is going to come to fruition. So the actual investor report is coming out later today, and that will be published on the Bank to the Future site later today.
Great.
Cool. So here's the question from John. And this is for Exodus, has Exodus considered a way to exchange Bitcoin and BFT?
We've talked to Simon about this at some point in time. So Simon, we're gonna have to connect on this, but yeah, this is something that we would love to do.
Yeah, I think it was, where did we get stuck? I forget. We were looking for, it was one of your exchange partners. Was it, I think you're integrated with Bittrex, right? Which exchanges are you integrated with?
So Changelly was one of our primary exchange partners, and they integrate with a number of exchanges.
Okay.
I don't know off my head.
Yeah, we had to, BFT had to be listed on Changelly to make that work. And yeah, our contact at Changelly, Constantine, he moved over to a different project. So Yeah, let's we'll try and pick that one up again. Thanks for reminding us, and a gentle kick up the arse.
Cool. So question here from Matthew Helmer. What are JP and Bill's favorite crypto products right now, and or products coming soon that excite them?
Well,
Bill.
I mean, obviously I'm biased to ABRA. I mean, I actually use the chart and alert functions every day. You know, so that's great. I do look at other exchange products and other DeFi products. I'm constantly looking. I'm particularly interested in the lending and high yield space right now. I test a lot of high yield products, not just in crypto, just for ideas. And probably for the last, I don't know, 24 to 36 months, I've been running tests with my own money across probably a dozen different high yield investing services just to get a feel for what people are doing. And it's really led to, I think, some very valuable feedback to the ABRA product team and influence our roadmap and thinking. And so I think it's important that we also spend time looking outside the crypto ecosystem for usability. We had in the early days of ABRA, we had people looking at Tinder, for example, on the UX side, because the app was growing like a weed, right? And so we said, what the heck are they doing from a viral adoption perspective? So we had people making copious notes on, hey, they're doing this that other people in the banking space aren't doing. Why is that? And since some of those UX elements actually made their way into our app in the early days. So we look at everything. We can learn from anyone and anything in the software space or the technology space.
Hey Bill, can you share what do you have any stats on what your average interest rate was over that period you've been testing with your own money?
Yeah, it was for the high yield services that were non-equity. I was probably generating between 8 and 9%. I haven't seen any defaults yet from March and everything going on with COVID. I'm mentally pricing in defaults for some of those services. We'll see. I'm happy to report back what I find, but I haven't, knock on wood, I haven't seen any significant default tips. Some of it is real estate, so I'm expecting some either not necessarily permanent defaults, but short-term, certainly, non-payments to be reported. But it's still too early in that I think COVID cycle versus reporting to know for sure how bad it's going to be. But I'm expecting the next kind of 9 months at least to be pretty bad. But the first 2 years were pretty good from a high yield perspective. So I'm happy that the services worked, and I learned a lot, right? So that was my primary goal. I wasn't even there to make a lot of money. I was actually there to learn on behalf of ABRA's users, and that's been very successful for us. And some of my team have done the same thing.
Have you got any ideas in terms of scale? If we have hundreds of millions pour into the industry, is there enough product to fulfill?
Oh, absolutely. I think we've nailed it. This is the question that you're asking is the existing services offering yield on Bitcoin could not answer that question in the affirmative. We have figured that out. I'm not going to give it away today, but this was the key, right? How can you scale investment services into the traditional world using crypto as the basis for that? And that, I think, is a question that we have an answer to now that you'll see in our announcements for the rest of the year and going into next year even. So we're in this for the long haul. Yeah.
Okay, I think same question to JP.
Yeah, so I'm excited about a number of projects, mostly in the DeFi space. I love what Compound is doing, the fact that you can get an interest on your crypto and that you can actually borrow stable coins and get pay. You could borrow at one point in time, you could have borrowed hundreds of thousands of dollars and pay a very low interest rate to get that money. So that's really cool. DYDX as a DeFi product for actually doing margin trading is something that I think is really unique and exciting. And then there's a new project that hasn't completely released yet, but the company's name is UMA, and what they're doing is they have this notion of decentralized oracles, and it's a really exciting model because they can take the maker model, what Maker and Dai have created, and they can use that technology in an arbitrary manner for anything that has a price. And I think that's super exciting for the potential there. And then finally, the Lightning Network. I think the Lightning Network, if we can make this very usable for customers, I think we can turn Bitcoin then more into a medium of exchange, given that today, you know, Bitcoin fees, they're not as bad as they once were, but they're getting up there again. And so the Lightning Network is something that I'm super excited about and I want to bring into Exodus.
Okay, I reckon we're on the 1 hour mark now, so I think we're going to have to wrap it up there. So thank you very much for bringing out those questions to me, JP, Bill. I think it was a really, really interesting conversation. We'll get this video out to more of our investors. Really look forward to seeing your upcoming announcements. And it's just great to see that, you know, for many people, this has been the worst economic time. And yet our industry, you know, some of you are already set up to be able to do this. We're getting leaner. Maybe the office doesn't even come back for ABRA. Who knows? Like, maybe this just makes us more efficient. Everyone's negotiating better rates. But our industry is continues to grow, and we will continue to innovate. And many of these, you know, these great companies are here for the long term. We have to pivot many times as our industry moves very fast. But there's these consistent players, and ABRA and EXODUS have been two of those. So, and we'll also follow up with a more in-depth. Look forward to the investor update later today, JP and Bill. Yeah, we'd love to take you up on that offer of a private AMA for the ABRA investors. That's going to do it for episode 56 of Bank to the Future Live, and we'll see you this time next week. Over and out. Bye-bye. Thanks, everybody.
Thank you.